This interview is a paid advertisement. It was produced on behalf of the company and is considered investor relations activity under Canadian securities law. All statements and opinions are those of the guest and should not be construed as investment advice. Please do your own due diligence or consult a registered investment advisor. Hello and welcome back to the Gold Newsletter channel. My name is Kai Hoffman. I'm the EdJR mining guy over on X. And together with our good friend Brian London, I'm the host of the Gold Newsletter channel. And I'm really looking forward to this company introduction / breaking news special we have lined up for you today. It is with Fortune Bay. The company just announced an updated PEA for one of its gold projects in Saskatchewan. And we'll catch up with the CEO to discuss what are the KPIs, what are the key performance indicators, what should we be paying attention to. But before we get to that, we'll get a good overview of the company. Who's Fortune Bay? What are the plans? What is the business plan? And how can we as investors participate in the company's success? That's what we're trying to work out. And we'll chat 25 minutes with Dale Verran. He's the CEO here in a few short seconds. But before I switch over to my guest, hit that like and subscribe button. It helps us reach a wider audience and it helps reach other investors that might be interested in this story as well. So thanks so much for doing that. Now, Dale, it is great to have you on the program. Thank you so much for joining us.
Yeah, thanks for having us, Kai.
Yeah, really looking forward to this, Dale. Very timely discussion. You put out a PEA this morning on one of your gold projects in Saskatchewan. But before we get to that, maybe set the scene a little bit for us, Dale. Who's Fortune Bay and what can we expect?
Yeah, so Fortune Bay Corp is a TSXV listed company under the symbol FRR. We also listed in Frankfurt under the symbol FTBYF and also on the OTC. We are an exploration and development company. We focused on two gold assets. These are advanced gold assets. The one of them is in Saskatchewan, for which we've just released a updated PEA with some exceptional economics. We're also busy unlocking potential on our Mexican project, which has a historical resource of 1.7 million ounces in gold and looking to get exploration work started there this year. We also have some uranium projects, which are partner funded. They go in the background, but provide some additional upside and optionality for our shareholders. And we've got a business plan to advance these projects and create a value through the discovery, resource delineation, and early development phases, keeping a very tight capital structure and a high leverage to our share price.
Fantastic, Dale. Yeah, let's talk capital structure because I like to get everybody on the same level before we dive into some of the details. What is the cap structure, Dale? How much cash do you have? Shares outstanding, warrants?
Yeah, so we've got around 58 million shares outstanding. So compared to peers, very tightly held and offering some high leverage there. Cash positions around just over $1 million at the moment, which fully funds the plans and catalysts or near-term catalysts we have identified for the company.
Who were some of the major shareholders, Dale? Run us through that.
A lot of insider participation in our stock, around 17% coming through, board and management. And then it's largely retail owned through high net worth strategic investors. We've got a really good group of shareholders involved in the story and really just looking to get the name out there. We've been under the radar for a while. We have two tremendous assets.
Yeah, maybe let's talk about the assets in a second here, but run us through the business plan first. Like, what's the ultimate goal? Where do you see yourself on the value creation curve? I know you use the Lassonde curve quite a bit in your deck. So where do you see yourself?
Yeah, we really focus on that steepest part of the Lassonde curve, and that's the part where discoveries made, resources are defined, and there's early development to demonstrate the potential and viability of the projects. And our team is really built for that execution of that phase along the curve, and we have the assets to do that with. So we're really well positioned in this cycle, particularly with gold and uranium.
When it comes to that, like in the cycle, like uranium, of course, is catching a bit right now. Gold, do we have to talk about it? Do we have to mention it? Like, we're close to $3,800 an ounce right now. It is definitely catching a bit. It is mainstream news now. But why'd you decide on those two, let's call them metals here? And we were joking before hitting the record button. Like, how difficult is it not to get distracted like a dog chasing a squirrel here?
Yeah, our focus is these companies aren't built overnight, and we've always been bullish on those commodities. Going back to when Fortune Bay was formed in 2014, that's when the gold assets were spun out into the company, and it's been a long patient wait, for the right cycle to really deploy capital. We haven't wanted to sort of blow up our share structure. So, we've sat patiently with the gold, and we believe now's the time to really move these assets forward. Gold obviously has got some really strong tailwinds now, so really, it's a perfect time for us. On the uranium side, I've got a background in uranium and saw some clear opportunities for some low-cost acquisitions in Saskatchewan's Athabasca Basin. And, we got in there earlier before the big staking rush, and now those projects are also underway through partner-funded activities.
Fantastic. Yeah, runs a bit through the partner-funded activities. I think we'll start with the uranium assets because they're not the main focus, of course, of the company right now. Let's start there. How much is being spent, and what are the agreements like?
Yeah, we've got on our Strike and Mermac properties, there's a $6.5 million expenditure requirement to earn a 70% interest in those projects. The work is underway, and there's, close to spending the initial phase of that to reach a 51%. That's through our partner Aero Energy. And then we have New Horizons, an Australian group looking to IPO next year. They've partnered on our Woods projects, which is a collection of 5 different projects, and it's a $3 million spend for an 80% interest. So, very happy to see those projects underway. There's exploration happening. There's around $1 million being spent just through the fall here on drilling at Mermac, as well as the VTEM survey on the Woods project. So those are operating, they're providing upside, but they're not distracting focus. Our main focus is our gold assets, where we funding those assets and deploying our capital. And it speaks to our business strategy. We like to manage the risk well, limit our downside. So the earlier stage uranium opportunities are higher risk. They're more greenfields type exploration, whereas our gold projects have more immediate or near-term discovery potential, as well as resource delineation and early development potential. So we're focusing the spend on there to more quickly move those up the Lassonde curve, whereas the uranium projects might take a while before a discovery is made. So prefer to have those partner funded.
No, really good exploration. Makes a lot of sense here. But Dale, if you were to put a label on your company, what would it be? Is it prospect generator? Because I don't feel that term really fits.
No, we don't like to refer to ourselves as a project generator. I think we are exploration development company that's also opportunistic and will take advantage of opportunities in the sector and the right commodities at the right time. But we really, if you had to label us, it would be a hybrid project generator, call it that. We generate projects, we drive them up the value curve, and then we look to exit. And we're all about value creation. And that's our primary model, is to really derive maximum value from our projects through the exploration and early development phases.
Yeah, it runs a bit through that approach. Like, how early do you get involved, and how far do you take the projects? And the reason I'm asking, of course, you just published an updated PEA on one of the projects, Goldfields in Saskatchewan. So runs a bit through that whole process. Where do you start, and where do you plan to end the process?
Yeah, so the assets we have they're different, right? The gold projects are more advanced, and there's clear opportunities. There's drill targets, there's already resources, there's drill intercepts with mineralization. Those are things we can follow up. We can build up resource bases. We can advance those through early development. On the uranium side, those are much earlier greenfields opportunities. There's a lot of spend needed before discovery can be made, and we prefer not to dilute against our gold assets by spending a lot of money on the uranium. So it made a lot of sense to partner those out. So it all, our model, really, we apply it depending on the project stage, the commodity, and where we are in the cycle.
Absolutely. Like you're trying, of course, to hit that sweet spot. But some of the projects, if you get in too early, you might not even have a discovery yet. So do you think you'll get 2 bumps? You get 2 kicks at the can here?
Yeah, absolutely. I mean, I think the uranium, we've got partners there that are going to be earning in. So our stake is less in those projects, but we retain a stake. That's the important thing. So we're retaining that upside for our shareholders. And the important thing is that it's non-dilutive. We're not having to spend on those projects. And in addition, they actually generate revenues for us through option fees, management fees. So we have some non-dilutive capital coming in to help cover G&A. And it's all about dilution, trying to maintain that tight structure and then deliver results on our lower risk projects, which are the gold projects, where we have tremendous upside in the short term and have identified a set of catalysts for that we driving through now with our plans.
Fantastic. I keep dangling the carrot for our audience, but let's talk Pomarosa first, real quick. Just get a quick update. Where do we stand on that project before we get to the meat of the discussion here, meaning the PEA here, of course. Dale, run us a bit through it. Like Pomarosa, how important is it to the company? What stage is it at? How much have you invested, and what are the next steps?
Yeah, it's a project that has an exceptional geological setting, and I'd encourage people to look at our corporate deck for that. It's a very unique setting. There's not many of them like it in the world, but where you do get those types of settings, you get big, large mineralized porphyry systems. Pomarosa already has a historical resource in the thinner cover rocks, so epithermal deposit of around 1.7 million ounces in historically defined resources. And there's lots of scope to expand that gold resource in the epithermal systems in the cover rocks. But sitting beneath that is this very large porphyry system. We know it's mineralized and just hasn't been explored, because the history of the project was always gold focused, and obviously going after the low hanging fruit that was soil anomalies on surface and just drilling those, which led to enormous amount of discovery already. So very exciting, offers the company some tremendous exploration upside. While we have Goldfields in Saskatchewan underpinning our value. And at Pomarosa, we are working through agreements with the communities, and we're looking to restart exploration there later this year.
Fantastic. I should be asking you a couple follow-up questions, but we really need to get to Goldfields. I think that's the gist of the conversation, or the meat of the conversation here is really Goldfields. We'll table Pomarosa for next time, Dale. I'll ask him follow-up questions, especially around the start of drilling potentially, like what the plan is for this year. Or actually, you know what? Since I have you, what's the plan? Like, what's the goal of this drill program? Like, what are you trying to achieve? What's the next catalyst that you're trying to hit there?
Yeah, at Pomarosa, the plan is to reach the exploration agreements with the communities and then start work, which will include first and foremost doing a current mineral resource estimate. We obviously have a historical resource estimate that was a 43-101 done by our predecessors. So we'll convert to current mineral resources, put those on our books, including a maiden resource for another prospect there that enough drilling's been done, but a resource never estimated. That's going to be the first step. Second will be some follow-up soil sampling, geophysics, and then looking to start drilling at Pomarosa in 2026.
Fantastic. How much budget have you allocated for Pomarosa, Dale?
The budget's not clearly defined yet, but we'd look to raise anything from I'd say 2 to 5 million for that project, depending where we sit, share price wise, etc. But we've got a clear set of plans there, and it's just a matter of exactly how we go about funding that and the timing of that. Fantastic. And yet to be disclosed. Yeah.
Gotcha. Well, one of the catalysts you could use maybe to bolster the share price a little bit was the PEA you put out this morning on the Goldfields project. Before we get to the KPIs here, real quick, give us an overview of Goldfields. What are we looking at? What's part of the PEA? What have you done in the past on the project?
Yeah, Goldfields, it has a long history, and really well timed for the cycle. It's in northern Saskatchewan near the town of Uranium City. That's a historical mining area. Uranium City has civil contracts. It's got a commercial airport. It's got a small population there that understands mining. And we just south of that, about 25 kilometers away on a road, there's a power line to site. It's currently inactive, but that power line does feed hydropower currently to the town of Uranium City. It's got a previously approved EIS for the project, sort of de-risking it or setting that precedent for the additional permitting we need to do. So it really checks a lot of the boxes, or I think all the boxes in terms of a near-term development. And we're really excited to now start advancing that asset beyond the PEA, which is really set the stage for how we're going to move it forward.
Talking about the PEA, we need to dissect it real quick. Run us a bit through the highlights. What is standing out to you? What should we as investors be focused on here in those numbers, Dale?
Yeah, I think the standout there is obviously the economics, and is what everyone looks at. But the base case used here was $2,600 an ounce. So that's going to sound very low relative to where gold sits today at almost touching 3,800. But at 2,600, there's an after-tax NPV of 610 million Canadian dollars. It's at a 5% discount rate. The IRR is 44%, and the after-tax NPV, NPV to capex ratio around 2, which is an important metric. If you go closer to spot, we drafted the news release with a spot price of $36.50 an ounce. Obviously, it's moved a lot higher since we put that news release together, sort of starting on Friday. And at that $36.50 gold price, the after-tax NPV is 1.25 billion Canadian dollars, IRR of 74%, and that the NPV to capex ratio goes to 4.2. So a tremendous, set of economics, and clearly ones that need actioning. We are planning to move that forward and have already started work toward PFS. What's key about this PEA is that we've designed it to expedite the path to production. And what we've done is scoped it so that the production is just below 5,000 tonne per day. In other words, that avoids a federal trigger for federal permitting. So we can keep the permitting in province. And keeping in province is hugely beneficial. Saskatchewan, obviously, the #1 ranked in Canada and one of the top globally as a jurisdiction. But we're also leveraging there off a valid EIS that was granted for the project in 2008. There needs to be some additional environmental work done toward the permitting to basically amend that permit. And then there's existing infrastructure. It's got a past producing status from a small historical mine. So we've really set the stage of this PS for an expedited path to development and to move it forward as quickly as we can.
One thing I haven't heard you mention yet, Dale, is metallurgy. Without losing people, but real quick, what are the recovery rates? What type of metallurgical testing you still have to do? And run us a bit through the timeline for PFS and maybe the steps that are still necessary, because some of the resources already indicated, which is great. But for the PFS, I'm curious if you need to do any more infill drilling, or what are your advisors telling you for that?
Yeah, so firstly on the recovery, it's a 95.4% recovery, and that's achievable because it's a very simple, straightforward mineralization. There's no complications to it. Most of it's free milling gold. It's a conventional plant. So we're very fortunate there to have this very simple metallurgy to work with, nothing complicated. And yes, we have 97% of the indicated resources in the PEA. So it's already largely de-risked. There's not a lot of drilling really needed to convert those resources into reserves at a PFS stage. The project has substantial historical data sets that we're also able to leverage off for PFS study. So going through PFS and FS studies is not really our critical path. What we see as the most time-consuming path is the permitting, and that's why we've already started that permitting. We're not going to give exact guidance on that yet because we're doing initial studies this year, and we're going to be engaging with the regulators early in 2026, and that's going to give us a firmer guideline on exact timing, and we'll announce those as soon as we have a better indication of timing. But I don't want to put sort of my head on the block with that yet, but other than to say we're working to advance this as quickly as possible, and we've chosen the best possible path available to move it forward quickly in the province of Saskatchewan, leaning on a previous EIS, which was for an open pit development and a 5,000 tonne per day mill, which is how we're scoping the project.
Where do you see the biggest levers that you can pull, Dale, on the project following now that you put out the PEA? Where do you think you can have the biggest impact by just tweaking things in the PEA or from the PEA?
Yeah, there's some opportunities there for us. Obviously, just de-risking. Community support is key. So we're starting community meetings later this year, and there we already have an exploration agreement with the communities. We've got a well-developed relationship, so it's a matter of now consulting them on a mine development. Other opportunities, obviously moving through the de-risking on the PFS, the engineering side. There's going to be some catalysts coming out there in terms of being able to refine that recovery a bit more. I think we can even improve the recovery with some additional test work. That's what the indications are at this stage. And other opportunities is resource growth. That's an important thing for us, and we have designed a drill program that we plan to execute later this year or early next year, where we'll be testing numerous targets around the Goldfields project that definitely warrant exploration and have the ability to increase the resource size, which we can then bring into a PFS level study and advance from there. So some really exciting opportunities as we drive this project forward.
From a strategic perspective here, Dale, would you be open to getting a partner on board, joint venture, even spin out the project already at this stage? It runs a bit through the strategic process behind it.
Absolutely. It's something that's part of our business model. We here to create value, and where a transaction comes across that helps us create that type of value, we'll definitely consider that. And we're not too particular on the exact structure of what a transaction might look like. It obviously depends very much on the incoming party, their capabilities. Are they a producer? Are they a private equity firm? What are they? And that's going to help guide how we structure a transaction. But certainly a lot of interest in the project. There's not many of these types of developments across Canada, and a lot of people seeking safer jurisdictions, and obviously looking for good gold projects with the right fundamentals. And Goldfields certainly checks those boxes.
Oh, 100%. And the all-in sustaining costs are all attractive as well. Margins are existent. Decent grade as well. Maybe let's talk grade real quick before not getting too technical. But I picked up a comment somewhere that it's fairly high grade for an open pit, Dale. Run us through that and the grade profile. Anything you can do to improve it, if it's even possible.
Yeah, the grade is good, is excellent. It's around the mill head grade is 1.2 gram a ton. The resource grade is around 1.3 gram a ton. For an open pit these days, that's exceptional. Across the Americas, you'll see an average of just below a gram a ton for open pit development. So we really stand out as a high grade open pit development. If you go to site, these rocks are sticking out the ground. They actually stand proud. You can walk on these on the mineralization, and that lends itself also to exceptional strip ratio. From a waste to ore perspective, we're looking at a ratio of 3-to-1. I certainly haven't seen a better strip ratio in the Americas. Maybe people know of one I haven't seen, but it's the grade, the strip is all exceptional for the project, and then add into that high recovery. It's just lines it up for a very attractive project.
100%. Maybe Dale, just to summarize as well, like next steps. Lots going on, as we've just heard you mention from all fronts here on the project side. What should we be looking forward to next here, Dale?
Yeah, there's a few. We've outlined in our news release those next steps. The pre-feasibility study is obviously important for us. We've already started work toward that through some test work, waste rock characterization. Those analyses are underway, and then there's additional planning around other studies that we'll be conducting. From a transactional point of view, for us, it's key that we identify what studies need to be done and in which order, obviously looking at timeframes as well, but to basically start to de-risk, to answer any of those questions that people might have. And we already have a list of those questions. So there's a few things we've got to work toward on the studies and putting those all together then in a PFS. We're also evaluating a different scenario there in tandem or parallel with obviously continuing down the PEA mine plan and toward PFS. There's an alternative scenario being looked at. From previous test work, some really high-grade concentrates were obtained from gravity and from flotation. Talking up to 2,000 gram a ton in these concentrates. So we don't necessarily need to have a plant that takes everything through to gold production on site. We're looking at what could we sell these concentrates for, and the transport, etc. And that could be a really attractive model for us in terms of an extremely low capex and the ability to also put that into production under the existing EIS. So basically use the existing EIS. There'd need some refreshing of data needed, but basically use that for even faster track to production. So that's an opportunity we're looking at as a next step. And then obviously the resource drilling I mentioned, we've planned the exploration program there, 2,000 to 3,000 meters, around 15 to 20 drill holes to test at Box and Athona, which are the deposits and are open for expansion, but also some key prospects on the property: Frontier, Golden Pond, and Triangle. And then obviously, next steps, the permitting's ongoing. We're advancing that permitting work. We'll have some baseline data wrap up later this year, and we'll talk to the regulators next year, get a clear guidance on sort of timelines involved to take the project to completion of permitting. And then on the community side, starting those initial community meetings in Q4 this year to start talking to the communities. We're not required to do that yet, but we've decided to do early initial engagement prior to the province actually telling us to go do it. So we set the stage and it's in line with our commitments to be open, transparent with the communities and start these processes earlier rather than later, because they are so important these days. And it's key that the communities feel respected, and that's certainly in line with our company's commitments.
I 100% agree with that. It's really, really important. Otherwise, no social license. Like, what's the point of even having a mining permit if you don't have the social license? So
Right.
I fully agree with that, Dale. Really appreciate you coming on. It was really insightful, jumping into the Fortune Bay story here, and of course, timely with the PEA out this morning as well. Dale, really appreciate you coming on. We can't wait to catch up again. Perhaps later this year. It'd be great to have you back. Get a bit of an update on where we stand towards the process towards PFS, and maybe start drilling at Pomarosa here.
Sounds excellent, Kai. Thanks for having us. Look forward to speaking again soon.
Likewise. Awesome. Thank you so much, everybody, for tuning in. Hope you enjoyed this conversation with Dale Verran of Fortune Bay. Really timely, as the PEA just came out this morning. Let us know what you think of the PEA. Let us know what the company. Are you even looking at the uranium projects? With uranium getting a move on this the last couple of days, Sprott Uranium Trust buying more uranium as well. Should the company focus more on uranium again? Of course, this is a rhetorical question with the PEA on the Gold Project this morning, but really curious your thoughts. So thanks so much for tuning in, and don't forget to hit that like and subscribe button. We much appreciated. Thanks so much for tuning in. Take care out there.